I think you're already seeing that if you can feel the tape. Over the last few weeks, for example, you might get used to be you get a mild down day in gold and you get a major whacking in the miners. Over the last few weeks, the miners have held up pretty well compared to the volatility, especially in silver, for example. But anyway, we think 2025 is highly likely, and probably soon, to be the year that you want to be fully emphasized in silver and gold and silver miners, not so much gold. I think gold's going to go up big. Okay, but I think silver and the miners are both, in that spread chart I showed on versus XAU in the gold, silver has a similar situation where it looks ripe now to turn up in performance terms. So I think that's about to happen, and I think that the provocation is the busting that bubble.
Gold prices edged lower on Friday, February 28th, marking their most significant weekly decline since November. Despite losing 2.5% over the past week after an 8-week winning streak, gold still posted a 2.2% gain for February. According to MichaelOliver from MSA, the long-term outlook for gold, silver, and mining stocks remains highly favorable heading into 2025. While gold is expected to climb significantly, silver and mining stocks could see more substantial gains. Technical indicators suggest that silver, like mining stocks, is positioned for a breakout, signaling an impending acceleration phase in the broader precious metals rally. Gold mining stocks are already reflecting this optimism. In the early months of 2025, shares of gold miners have surged as inflation concerns and geopolitical risks drive investors toward safe haven assets. The VanEck Gold Miners ETF, valued at approximately $14 billion, has gained around 20% this year, with most of its 56 member stocks posting positive returns. In contrast, gold has risen by 12%, while the S&P 500 has gained just 1.7%. This shift in market dynamics represents a notable departure from recent years when mining stocks typically lagged behind the price of gold. Oliver notes that continued market instability could lead to a significant influx of capital into the precious metals sector, accelerating price gains, especially in silver. Growing investor interest is fueled by concerns over global trade policies such as Trump's tariff hikes. Central banks are diversifying their reserves by increasing silver, platinum, and palladium holdings. As a result, 2025 may be a breakout year for silver and mining stocks, with demand for precious metals expected to rise as a hedge against economic volatility. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
We know that gold, silver, and the miners had a major pause. In the case of gold, it was a pause from mid-2020 onward. Gold went in this range, like 3 or 4 times it got above 2,000 and failed. 2,000 failed. Well, we warn people that is not a top. Gold is never topped with multiple horizontal highs. That's the launch pad, okay? In March of 2024, we put out a report arguing that all of the long-term metrics of silver, the miners, gold, which had either corrected or gone into a pause, like gold and silver and miners, of course, staircase down somewhat, while gold was going sideways. That was over, the pause was over, and the long-term bull trend that actually began back in 2016 by our metrics was again alive. And sure enough, gold went, March of last year, it started to explode again. Silver did too. Remember, silver back then was $25 to $26. Okay?
Right.
And GDX, the gold mining ETF, was 31.5. Right now it's trading either side of 40. Now, a lot of people think because of the day-to-day action and because of where, for example, GDX is in relation to its 2020 price high. That high happened to reach 45, and right now we're trading either side of 40. We've been up to 44 recently. So we're below that high, and therefore miners are weak. Well, relative to that high they are, but actually I just did a little math here with a day left in the month. If you go back 12 months, meaning the close of February 2024 through the close of 2025, 1 day left. Gold right now is up 38.5%, 12 months. Silver's up, sent you a chart, and it shows the gold miners, gold and silver miners actually, represented by the XAU index, which is the Philadelphia Gold and Silver Miners Index. Okay. It's been around since the 1980s, therefore it has a lot more history than, for example, GDX. Okay. So you go back to the 1980s, and when you look at that spread chart, you'll see that from the 1980s through 2008, XAU lived in a percentage range of 17.5 on the downside and about 35 on the upside, meaning if you divide the price of XAU into the ounce of gold, it was 17.5 to 30+% of the price of gold for a couple decades. That was where its happy zone. And it went up and down, but its low was 17.5% repeatedly. When it broke that, in that bear market that, of course, hit gold, silver, and the miners, and for miners, it started in 2008, but for the gold and silver, 2011, they dropped in net price, and so did the performance of the gold miners. XAU went down all the way to 4% of the price of gold. So, I mean, here you pretend it's a stock trading 17.5 to 30 something, and it goes to $4. Okay, either it's going out of business or that's it. Okay, now, of course, an index doesn't go. Okay, anyway, since the late 2015 low on that spread, which got down to about 4%, popped up and lived in a range for 10 years above that low. Right now, we're like 5% plus. XAU divided into gold, expressed as a percent. And you can see that range that we've been in for 10 years, the low end of that chart, okay? Now, I've also plotted a downtrend line on that spread chart going all the way back to 2000 area. There's a 3-point downtrend line, and you'll see that for the last couple of years, the action of that spread has been pushing at that line, but below it still. We got out above it a handful of months ago. So you broke that 3-point trend line. We're watching some other metrics on that spread, momentum, technical, and spread measurements, not fundamental assessment. We know it's cheap, not getting cheaper versus gold. It's held its own. In fact, it's done better since 2015 than gold has. Percent gain, a little bit. That spread, when it breaks out, will indicate to us the acceleration phase in the overall bull trend in the monetary metals. That's when the miners suddenly get the flow of money.
MichaelOliver is optimistic about silver's exciting potential for a standout performance in 2025. Historically, silver has shown a remarkable ability to outperform gold in late-stage bull markets, and with increasing capital inflows, we may be on the brink of a breakout year. While gold is poised for success, some analysts are even predicting prices could soar to $3,300 an ounce. It's an excellent time for investors to broaden their horizons and consider silver a fantastic option. Analysts are forecasting silver might revisit its all-time high of nearly $50 an ounce, currently testing initial support around $32, while gold remains strong above $2,800. Silver may not yet have the spotlight it deserves, as indicated by the gold-to-silver ratio, currently above 88, which is significantly higher than the historical average of 60. A shift in this ratio could mark the beginning of silver's exciting next chapter, making it a key asset to watch in the precious metals market. The future looks bright for silver. Let's get back to the interview.
It's done very well versus gold over the last year. It's really not underperformed, as most people think. Why? Because silver has these bigger pullbacks. And therefore, but you measure, if you're an investor, you don't care about this week or that week. You're looking at month to month, et cetera. And maybe you don't even look at it till the end of the month. Say, what happened last month? Okay. And it's very good. But its spread relation to gold is very cheap still. It's 1.14%. Divide an ounce of silver into an ounce of gold. Now, if you go back 50 years and look at each year, how high did silver get on a percentage basis to an ounce of gold in that 50-year period? 20 of those years, it reached at least 2%. Whoa. Okay. If we break out over the near-term action, then we plot it. There's a nice downtrend line on that spread right now that since that October high in silver at 35, the spread made a peak then, and it's created a very clear downtrend structure. So when you break out above it, it's saying, okay, I'm back. Okay, silver's going to outperform. If you just take it from 1.14% up to 2, which is normal, 20 years out of 50 is hardly abnormal.
Right.
And say, oh, I'm back to, normal. That's a doubling of the price of silver in relation to gold. So, over the next year, if it went to 2%, that means if you bought silver, you made twice as much money as you did owning gold. And it could even be more than that. So I think we're in the same situation with silver versus gold and miners versus gold. We're on the cusp of the new money flow, largely from a broken U.S. stock market bubble, seeking alternatives. And frankly, if you do the math, you'll see that silver, it's up around 40% over the last 12 months, February to February, okay? S&P, I just checked, up 16.8%. Okay, I thought the stock market's beating the pants off gold and silver, okay?
Right.
Up 16.7% the last 12 months, February close to February close. And silver's up more than twice that. And yet nobody's cheering. Silver's a dog. Okay, well, fine, whatever you want. We see it not as a dog, but as a dog on a leash that's ready to run out in front of the mama market and pull the mama market. So that's what we see for 2025 is probably the best place to be. Historically, the T-bonds and gold have beat the S&P during bear markets. And there have been periods in those bull markets in gold and bonds where S&P was going down. And there might have been a month where, gold had a bad month too. But basically, it was part of an uptrending process. And I think we're at that point now where if you break the stock market, that money flow will cause acceleration in this arm wrestling bull trend that gold is in, and the miners and silver. And I think you'll notice a tonal difference. And be there before the mobs. Okay, let the mobs chase it. That's fine, but get there before. And that's what we're trying to time is the spread breakouts, because those spread breakouts often are very well timed to the points of acceleration in price. This was true back in the 1979-80 bull and back in the 2010 to 2011 phase of that bull market, where the spreads broke out and silver beat the pants off gold in that last year. I think we're on the cusp now. And I think this pullback, consolidation, et cetera, is just more repetition of, if you look at a silver chart of the last year, it went from 25, 26 up to 35. Now it's trading either side of 32. Okay. But if you bought every 10% pullback that you were offered in that move, you're beating the pants off the guy who just chased the highs. Okay. Every time it looked dark, buy it, because the big picture says it's light, not dark. So anytime the mobs say, oh my God, that's the top, we're going to correct for 8 months, it's going down 50%, buy it. And that's been the lesson, especially of the last year.
With market trends pointing to a potential breakout in silver and mining stocks, the precious metals sector could see substantial growth in the coming year. As inflation concerns, geopolitical risks, and shifting trade policies drive investors towards safe haven assets, silver's historical tendency to outperform gold in late-stage bull markets may soon come into play. Given the widening gold-to-silver ratio and increasing central bank interest, could 2025 be the year silver finally reclaims its historical highs and asserts its dominance in the metals market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.